Good afternoon, good evening, and good morning, everyone. My name is King Tai. I'm director of the Bonami Group. I want to welcome everyone to our exclusive webinar, Unveiling a Groundbreaking EB5 Investment Opportunity. Now we have a lot to cover, but before we get started, just want to go over a few housekeeping items. For Q&A, we will have one at the end of this session. So if you have any questions, please use the Q&A box and enter them there. We will address them later on during our session. We do also have a polling question for everyone for you to get involved with. So that will happen later on during the session. Just as a disclaimer, with this webinar, we are providing information, but we are not providing legal or wealth planning advice. Now, without further ado, I do want to introduce our speakers for today. Our first speaker, she is experienced in EB5 since 2012. She co-founded EB5 Due Diligence. She has evaluated over 200 EB5 investment. She is an advocate for transparency in the industry. With the RIA Act of 2022, she recognized the unique opportunity to develop a groundbreaking EB5 offering and had a vision to establish a project that would not only be situated in a rural market, ensure that an accelerated petition processing for every investor, and also want to generate revenue promptly to repay investors upon the conclusion of a 2-year at-risk investment period. This vision was materialized in the form of the EB5 Energy Fund, which provides both of these benefits. She is very knowledgeable in EB5 deal structures, is well versed in all EB5 immigration requirements. She's an active industry speaker at many events. She's fluent in English, Punjabi, and Hindi. She is Rupy Cheema, the managing director of EB5 Energy. Rupy, welcome to the webinar. I'm very pleased to have you join us today.
Thank you.
Thank you. And also I want to introduce our next speaker. He is a reputed Indian immigration lawyer, a Canadian citizen, has been involved in this space since 1993. He's the founder of the Ajmera Law Group. He's also a published author, has 2 books. One is Millionaires on the Move and How to Plan for a Child's Foreign Education in 2021, Myth versus Reality. Both of these are available online. He is Mr. Prashant Ajmera, founder of the Ajmera Law Group. Prashant, I'm pleased to have you on this webinar as well.
Thank you, King.
Thank you. And now I know everyone joined us today because everyone is intrigued with the EB5 energy opportunity and the benefits it brings. So without any further ado, I do want to welcome Rupy to walk us through this very unique project, and I'll hand it over to you, Rupy, and to yours truly.
Okay, thank you. Hi, everyone. Welcome. I'm glad you were able to join us today. So today I'm going to introduce you to an opportunity that is significantly different than anything else in the market. And, in our lifetime, we have seen many industries change suddenly. And I think that we are about to face that in EB5 as well. We are going to see a drastic shift in this industry away from it solely being a real estate financing program. And there's a couple of reasons for that. One is because of the huge advantages being given to the rural projects right now. And commercial real estate just simply cannot thrive in rural markets. And secondly, unfortunately, I think we will witness in the near term some failures, a substantial amount of failures with the EB5 real estate projects because of economic factors. And, and these are typically risky loans. So having said that, I believe I'm introducing this very interesting opportunity, and I call it a groundbreaking opportunity. And why do I call it that? There's a few reasons for that. One is it's an equity investment. It's not what you're used to hearing, a loan model. And what does that mean? It means that it's structured like a private equity fund. It's structured for EB5 investors. You're not investing in a single asset or a business that is owned by someone else. So you're not merely providing cheap financing to someone else's business. You're investing in a company that what we call the new commercial enterprise that owns the project entity. Therefore, the EB5 fund controls all of the assets in this program. And compare that to the new commercial enterprise making a loan. Typically, it makes a loan to a holding company, which is a shell entity with no assets, and that entity would typically invest as equity into the project entity. So I have reviewed hundreds of EB5 investments, and a majority of them are all structured what we call as structurally subordinated loans, which means the EB5 fund will invest into a holding company. Sometimes even there's multiple holding companies, then there's a project entity at the bottom. So the EB5 fund is pretty far removed from the assets, but they're being sold as safe loans. So we'll get into that a little bit later. So this is truly an equity investment where the investors are closely connected to the assets, and the EB5 fund has control over the assets. And another second reason, it's truly a rural investment. Now, oil and gas wells cannot be located in urban areas. It's not like a developer trying to shoehorn their location, try to squeeze it into an address that may qualify as rural investment. This is truly a rural investment, which gives you two big benefits. The first one being priority processing, which means that your petition is going to be processed ahead of everybody else. And the second is a visa set aside, which means that you, once your 526E petition is approved, there's a visa waiting for you, regardless of your country of birth. So you're not subject to any country backlogs. And then another big feature of this investment opportunity is the fast repayment timeline. I just want to confirm with Peter or King, are we okay? Can you hear me okay?
We can, yes, very clear.
Okay, I just wanted to make sure, because I have this odd message on my screen. It says remove spotlight. Okay, I'll continue with that. So the third big feature is the fast repayment timeline. And you wonder why that is. Well, how can we do that when a typical investment takes 5 to 8 years to get repaid? It's the nature of the industry. It's the nature of oil and gas development, because it only takes about 6 to 8 weeks for us to drill the hole, for us to complete a well. And 60 days after that, we are actually receiving revenue into our accounts from the sale of oil. So compare that to a large commercial real estate project. It's going to take 3 to 4 years to build it. And then it's going to take another few years where the revenue has basically become stabilized, or they have hit on their projections that they're ultimately hoping they would hit on. And that is why these loans are structured for 5 to 8 years, because it gives enough time to the developer to refinance that loan. So, the oil and gas is just a much quicker timeline. And that's what allows us to generate the cash quickly and repay investors. And so I think a fourth big benefit of this opportunity is a decent return. And, you know, I have often heard from issuers in the industry, well, you know, EB5 investors, their goal is for a green card. The green card is their return. They don't really care for, you know, to get a big return. And that's how it's sold, that you're getting a green card, and basically all you care about is preserving your initial investment. And as though that preservation is guaranteed. You know, you're not investing in a government deposit. These are not CDs. These are risky loans. So people deserve a decent return, especially when these loans are structured as mezzanine financing. And typically in the market, a mezzanine loan, a developer would pay anywhere from 12 to 15% on a mezzanine loan. But typically with EB5, they're getting anywhere from 1/4 to 0.5%. So they're not compensated for the risk they're taking. But this investment opportunity has been structured in a way that not only does it pay quicker, which reduces the risk because your money is not at risk for very long. And then also you have the opportunity to participate in substantial returns. So with that, I would like to move on to the presentation and give you some high level, some highlights on this opportunity. Okay, first, I have to say that this is not an offer to sell securities. We are providing information. This is an information session, and an investor can only subscribe by receiving the offering memorandum. All right, so some of the highlights of our investment are that it is a lower investment amount of $800,000. And we are seeking to raise 120 million from 150 investors. The total project costs are 250 million. And this is unique in the way that, because what we're going to do is we're going to raise 120 million from EB5 investors and deploy that into oil and gas production. Because of the money, we start generating money right away. We do not need to get debt. We are going to generate about $130 million in cash flow over the next 2 years and deploy that as well into more wells. So that is how the total project costs are made off. Essentially EB5 funds and all internally generated cash flow in the first 2.5 years, and there is no need for us to take on any debt. So therefore, the EB5 investors stay in priority position. They have priority over the assets. This is a rural investment, which means we're estimating that the petition should get approved within a year. And as I mentioned earlier, there's a visa set aside, immediate visa availability without a consideration of country of birth. We are aiming for a repayment of in 2.5 years, beginning in 2.5 years after you have made your investment and the money's been deployed into the project company. There is substantial profit participation, which I will talk about in some other slides. And we have a projected job cushion of 49%. I've already talked about the priority processing and visa set aside, so we'll continue. So the Economist has estimated that we will create 2,232 jobs. 150 jobs would need to create 1,500 jobs. So we have a job cushion of almost 50% in this project. As I mentioned earlier, It's a $250 million project, and we do not plan to take on any debt, which means no senior lender to deal with. Now, this chart shows a lifespan of an oil and gas well. An oil and gas well will typically produce oil for about 20 years. And as you can see from this chart, majority of its production is going to happen in the first 3 years. And that is why we're able to do what we're saying, that we can have faster repayment simply because most of the revenue comes in the first 3 years. And then the first year, especially the first year, we can take that cash flow because we're not allowed to pay investors that money. We can take that cash flow and keep reinvesting in more and more oil wells. This is our projected earnings over 5 years, the first 5 years. 18 million to 71 million to 100 million, and then 95 million and 60 million. So this is what allows us to plan for our initial investment repayment in the 3rd year. Now, the profit participation. We estimate that based on an average oil price and averaging $72, and if we are to sell all of our assets in year 6, that each investor can earn profit of $400,000. And that could be less or more based on the average oil price. And this is a little chart that shows at different oil prices what an investor can expect to earn. So what is oil and gas drilling, and what is our plan? So we are planning to drill 72 oil and gas wells in Oklahoma, in rural counties of Oklahoma. And this is not oil exploration. This is not where we're drilling a hole and hoping we will strike oil. This is what we call, we're drilling into proven reserves. Now, what is a proven reserve? Proven reserve is an area where there is at least a 90% chance of developing oil. And so we're drilling into oil wells that have already been drilled in the 70s, 80s, and 90s. So what happened in the 70s, 80s, 90s was that companies could extract about 3 to 5% of the oil that was already there. But now with new technological advances and with the horizontal fracturing, we can extract 15 to 20% of those wells. So we have the data on all the wells. The state of Oklahoma knows exactly, has the data on each well that was ever drilled in their state. And we have the seismic and geologic data. So we know exactly which wells we want to go into and what was their original production. So we're simply going to go into the already drilled wells, and we're going to go horizontally. And at this point, I'm going to show you a short video, which basically shows the process.
Vertical wells drilled during the 70s, 80s, and 90s only extracted about 3 to 5% of total reserves available in their target area. The common misconception is that drilling an oil well taps into a pool of oil. In reality, oil and gas is dispersed throughout various layers of rock and migrate to the most porous areas. These areas are under enormous pressure from the weight of the earth above and dense rock below. By drilling a well, you create a low pressure area, causing the oil and gas to be pushed towards the well. we'll be horizontally fracking previously drilled wells. This begins with drilling a 1.5 kilometer horizontal well from the existing vertical well at a depth determined by our geologist. A perforating gun is then inserted. Creating foot-long fissures in the rock formation. Fracking fluid is then pumped into the well at extremely high pressure, cracking the shale rock and creating fractures for trapped oil and gas to escape. Sand and clay is injected to prop open the fissures. Newly fracked wells are initially expected to generate about 300 barrels of oil per day, then decline to about 100 barrels of oil per day by the start of year 2. Our focus is on the Mississippi Lime, a geological limestone formation rich in calcium carbonate that was formed through the deposition of organic material. The formation is approximately 100 meters thick and is renowned for its abundant oil and natural gas reserves. By fracking this horizon, we can extract 15 to 30% of the existing oil and gas resources compared to just 3 to 5% from the original vertical well. And utilizing existing vertical wells reduces costs to just $27 per barrel of oil compared to $35 for newly drilled wells. With existing surface equipment already in place, we can start producing oil immediately after completing the fracking process. Due to high oil and gas activity in Oklahoma, existing gas pipelines and oil tanks are readily available for transport from our sites. Our success in recompleting vertical oil wells relies on the expertise of our oil and gas team, which includes a geologist, a petroleum engineer, drilling engineer, heavy equipment operators, and field service technicians. Their combined knowledge and skills ensure that we identify the best opportunities and implement effective techniques for unlocking these untapped reserves. Invest in America's energy independence with EB5 Energy.
Okay, I'm not going to take too much time here. So basically, this is our executive team. Well, there's more on the next slide, and you can read their bios on our website. This is a team that has drilled or been involved in drilling over 3,000 wells. They have tremendous amount of experience in the oil and gas sector. You know, obviously, a project of this scale is going to require a very experienced team to execute, and I'm very confident. I have a lot of confidence in this team. So from here, I actually would like to turn it over to Prashant, who's going to talk more about the little bit of history of the EB5 program and where we are today and how we got here. Prashant?
Thank you. Thank you, Rupy. Am I going to be seen here or? Okay.
We can hear you, Prashant.
Yeah, okay. All right. So thank you, Rupy. It was a very nice presentation, something different. You are absolutely right. It is a groundbreaking in EB5 industries. Nobody has heard about the oil industries coming and raising the fund for the drilling of the oils and making the EB5 a successful projects for the investors, and also the very speedy processing times, good returns, and no lock-in time. So the revenue is sure because we all need an oil. So I think it is a groundbreaking project for sure. But how we reach here today, we are on 19th of July 2023. Probably I will say this is an inning number 3 of EB5. And why do I say that one? Well, before 2010, EB5 was a not very known programs. 2010 onwards, it becomes a more popular programs, and it come to an end on 21st of November 2019, where we all know that the government, your USCIS, mentioned that this is the last time or the last day where we're going to accept the applications with the 500,000 and $1 million investments. And in between 2014 and 19, we have seen so many times on and off. But that was the last day where we came to know that, okay, this 28 years old regulation is not going to be there anymore. And then they come up with the regulations that now the investment amount is going to be 900,000 instead of 500,000 and 1.8 million instead of $1 million. But the way in which this was published and the amendment was made, it was challenged by the certain stakeholders in USA in a federal court. And ultimately the court decided in USA that this is not the way you can raise the amount from $500,000 to $1 million and $1 million to 1.9. And that was in June 2021, exactly to be precise, on 23rd June 2021. But at the same time, also the Congress decided that the EB5 is always taken as a pilot programs or a private regulations. It will come to an end on 30th of June 2021. And we were expecting, all of us were expecting that within a couple of months, the government will come up with the new rules and regulations, but it took them almost 9 months. And we saw the new EB5 regulations, which is known as EB5 Reform and Integrity Act, only on 15th of March 2022. And the amount was also changed. That means now if you are making an investment into regional centers, if you are making an investment into rural area, if you're making an investment into a high unemployment area or an infrastructure project, the investment amount would be 800,000. And if you're making an investment anywhere else, the amount is going to be $1,050,000 US. The condition remains the same, that you have to create 10 new jobs. But in the new EB5 Reform and Integrity Act, there is a lot of compliance requirement is there, particularly for a regional center. And that compliance requirement is not for the investors, but to protect the investors, because we have always seen that in the olden times, people were worried about the compliance requirements, what is the project is to be approved, not approved, and so on and so forth. Anybody can join the EB5, anybody can claim it, how the regional center is being done, how my money is to be handled. So all those questions which investors had are being taken care, almost I would say all of them, in this new regulations. So this itself can be a long presentation by itself, but it is, I can say in a one word or a one line, that it is for the protections of the investors. But it has a 2-3 highlighted points I would like to mention very quickly, is that particularly for the, what has changed for the EB5 agents or marketing agents or the immigration consultants who are in India or who are in UAEs or different parts of the world who are promoting. Well, under the new rules, if you are receiving a referral fees from your EB5 projects, then you would be required to register with the USCIS and you would be required to disclose it, this referral fees or commissions, we call it, to your clients. That's number one. Number two, how your money is being handled. As an investors, the money is now with the third party escrow accounts. So that's the second advantage you have, it that your money is not directly going to the projects. And the third one is that if your client has their relatives or their children in America, they can simultaneously file for their EB5 adjustment of status along with your EB5 526 petitions. So these are the three highlighted areas which can be beneficial to a lot of people. So that's where we are. Again, I'll repeat, there are 4 categories of the EB5 now being devised, which is one is the regional centers, other one is a rural area, third one is a high unemployment area, and the fourth one is infrastructures. And particularly this projects, the EB5 Energy is in a rural area, and out of the total 10,000 EB5 visa available for the EB5 category, the 20% is put it separately for the rural area, the project like EB5 Energy. And if you look at the priority date of the USCIS and Department of State's websites, it is available or it's current. That means as soon as your petition is approved, which might take a few months' time, visa is available, and within a less than a 1 year period of time, you can have your conditional green card. So that's what I'd like to give you as a general view. Now let's move to the next item on the agenda, please.
Yeah, so next item is the impact of the RIA, and I want to get your thoughts, both your thoughts on this. Rupy in particular, I want to get your thoughts on the RIA's impact on the individual investor itself. I mean, in your view, how is this impacting the direct client itself, in your view?
Sure. Before I do that, just a quick clarification. So all the categories that Prashant mentioned, infrastructure, rural, high unemployment, they're all within the regional center program. So so regional center is not a separate category, but it sponsors it's going to sponsor every project, whether it's high unemployment, whether it's infrastructure, or whether it's rural, just to clarify that. So what's the impact of the RIA on EB5 investors? As Prashant mentioned, the first big impact is investor protections and transparency. It's really designed to ensure, to reduce fraud, and that the money does not get misused, and that the investors are, have transparency as to how their money is being used. So I think that's a big benefit to EB5 investors. And then there is also two other big benefits. One is the rural program, which gives you not only priority processing, a visa set aside. So that's a huge benefit for investors. And the third big benefit that no one in the industry is going to talk to you about is that the new law now says that you can get your money back after 2 years of it being invested into the project. Now, you're not going to hear about that because no other project, these real estate projects, cannot do that because of their timeline. And so they're not going to promote it. They don't want to talk about it. If anything, they are trying to confuse the market as to with that law. I've heard issuers say, well, USDA hasn't provided clarity on it. We don't know yet. But no, I have talked to some of the most qualified EB5 attorneys. I've talked to Robert Devine. They said this is the new law. The law is that you're allowed to get repaid after 2 years. This is a huge benefit simply because we don't have to go to those days where people's money had to keep being reinvested over and over into different projects so that they could keep it at risk. So I see that as a huge benefit as well from the RIA.
No, that's a real game changer. Absolutely. And Prashant, I want to get your thoughts on the same question, but from the agents and finders perspective.
Agent perspective. Yeah. As I mentioned, that the EB5 Reform and Integrity Act has the very specific requirement that in EB5 projects, the government wants to know who are getting involved with the projects. So first and for the first time, we have seen that in EB5 projects, if you're not an American citizen, you or a green card holder, you cannot get involved. And we have seen in the projects in the past, whereby the people from the other countries, China, Taiwan, Korea, they have got involved into the EB5 projects. They were part of it. They were partners. They were promoters, and so on. That's not allowed. The second one is that the government wants to know that who are the promoters within even USA and whether checking their backgrounds. And the government also very well aware that these projects are being marketed not by the regional centers directly, but through their associates, through their agents in different parts of the world, in different countries. And they are also being paid a referral fees. So the government wants to know that who is marketing your projects and who is bringing you a particularly each client. So if you have a clients A, B, C, and D, you have to report and you have to register with the USCIS. You have to get even a declaration from your clients that this is the clients whom we have made the declaration about the reference fees and the commissions or the trailing commissions, whatever you've been paid is done. Not only that, if you look at the latest EB5 526 form, in that form also now specific question is there. What is your investment you have made? What is the management fees you have paid? And have you been declared all this amount being declared to you, yes or no? That's also in 526 form, the petitioner has to sign and give it. So the challenge for the agent is to disclose these amounts and get these ones. And that is going to be a big one, particularly many agents, those who are not regulated, unregulated, in a country like in India, where the agents are not regulated at all, could be a huge impact on all these ones, working with the clients and come around and disclose all these things to them. So this is going to be the big game changers for many agents.
Right, the greater transparency. Yep. And on the topic of India, I want to stay with that, Prashant, because prior to the webinar, we did get a lot of inquiries from India and about the concerns and challenges they face, and in particular, the 20% TCS. So I wanted to address that today because we had a lot of questions on this, and of course the backlog as well. So if you can shed some light on this, that'd be great. And so we can answer these questions that we received prior to this webinar.
Right. So TCS is a tax collection at source. Before 2020, there was no TCS when you are remitting money out of India as an individual, which we call it an LRS, liberalized remittance schemes. Then the government introduced the 5%. But then also the government realized that a lot of people are remitting the money, but their incomes doesn't justify that kind of a remittance. So in order to stop them or to make them accountable, they say that in our budget in the last March, the government announced that we're going to increase this TCS or tax collection at source from 5% to 20%. What does it mean? That if you are, say, investing 800,000 in an EB5 projects with the EB5 Energy, you need to have the liquidity of $1 million with the bank. So bank will remit the 800,000 and 200,000 they will collect in your name with your PAN cards or your tax ID with the Indian government and remit that one to the Indian government, Indian tax department. So as an investors, when you are filing your tax return next year for the year after, in that tax returns, you can reclaim it as advance tax. So it is not an additional amount. The one thing which I would like to make it clear is that this is not an additional tax, but this is an advance tax which you are paying. But the people, what going to investors and the agents, what they're going to find difficult is that they have to come up with the more liquidity. Instead of 800,000, they have to come up with $1 million liquidity. So that question is there, and this might deter certain investors to come up with $1 million when they need to remit it out. With respect to the backlog, very quickly, yes, at the time of November 2019, a lot of applications are being submitted, and that's why the backlog is there. But if you look at the priority date from the USCIS website, means Department of State's websites, the government has reached already the file submitted before the 8th of December 2019. So for in India right now, yes, we are facing the delay because of the COVID and so on and so forth. But after November 2019, in my opinion, there's not going to be a huge delay, for a simple reason that amount was increased. There was an uncertainty about the EB5 program. There were not that many projects were available. So from 22nd November 2019 till date, I don't think that there is a large number of applications being submitted. So once we pass through that November 2019 period, it should be very quick processing for the Indian investors. Thank you.
Okay, so that's good news for our friends and agents in India. A
Yes.
shorter frame, and with the EB5 Energy project, it could be even quicker overall.
Yes, absolutely, absolutely.
Okay. No. Thanks for Prashant. And then I think the next topic I want to cover was MENA, as we had questions from our audience here, and as I know, Prashant, you've done, you work with clients in the UAE as well. You've worked with partners there, so I'm interested also to get your view on the opportunities here and the challenges they face here, because we've had a lot of questions about that as well.
See, in the MENA regions, the people are interested in moving under the EB5 programs, but they do not want to go and stay there because they have a good job and a good earnings or a business there. They are doing it for their children. But at some point in time, they want to move to USA. And that's why the many families, those who are capable, ready to do it, but because of the EB5 residency requirements, they are choosing other programs, like a Caribbean programs, like a European programs over the EB5. Right? They say, yes, we want to move to that. But also there is equally a good opportunity is there for an EB5, because now we are reached to in MENA regions where most of the population is expat. And these expats are retiring, those who are working. And they cannot continue to stay in that MENA region, particularly in UAE and all those neighboring countries, because now there is no company to sponsor them. Probably they don't want to go back to their home country, like say India, Sri Lanka, Bangladesh, Pakistan, Philippines. So where would they go? And probably their children are already studying in America. They might be getting a green card or not getting a green card. So these are the good targeted audience where they are, could be an opportunity for an EB5. And number three, obviously the business reason. Because if you look at the other business immigration programs of USA, which is an L1 visa or the EB1C visas or an E2 visas, obviously the EB5 is the best options available to them, where they can get a direct green card, or they can, if they don't want to wait, they can, particularly it is good for MENA regions that you look into the possibility of L1 visa, move to USA very quickly, but keep in mind that within the next year and a half or 2 years, I would like to invest some company like an EB5 Energies, make an investment and get a green card for me, my spouse, and the children. So that's the three different opportunities. I see a tremendous opportunity in MENA region.
Okay. No, I agree. I've been there myself, and it's not a retirement destination. I mean, there's no retirement plan for most expats there. And
Yeah.
From what I see, there's, in addition to, Philippine, Pakistan, Indian, I've seen more and more actually Chinese expats too. So
Right.
obviously China is a big source for EB5 investors, but in the Middle East, in UAE in particular, I see that as another group that could go to the US, but they're going through from the UAE to the US that way, not directly from China too. So that's another group. I think
Yeah.
that's part of that expat community for sure. Moving on, I do want to cover EB5 financing, and Rupy, going back to you, as you mentioned, there's a lot of misconceptions. There's a lot of like myths, facts, and fictions about this topic. So it'll be good to hear from you. With your due diligence background, it'll be good to hear about is a real estate a safe investment? Is a loan considered safer than equity investment? So it'll be good for the audience to hear which is fact, which is fiction, and
Right.
Yeah.
Well, I don't want to spend a lot of time on this. I have written a paper on this topic, and I can make that available to the audience by email as well. So I won't take up too much time. And one of the reasons I want to cover this is simply because people in the audience who have been involved in EB5 in the last 10, 12 years have really come to learn, that's the only product they've seen. So they have, majority of the projects are structured in a same format. So they are asking they're used to asking the same questions, is this a loan? Is this equity? So they have, built sort of biases as to what's a good project, what's not. So, I would like to sort of debunk some of these myths about, especially loans. There seems to be a perception that the loan is safer. And I know why people feel that way, because it has a maturity date, right? It has a term. So if it's a 5-year term, typically it always comes with extension. So you can average it's a 7-year term, but at least you believe that the developer has an obligation to return that money in 7 years. So you see that as a clear exit strategy. There is a time, there's a clock ticking, and they have to pay that. But you have to evaluate these loans at a much deeper level than that. These are very complicated instruments, especially when a senior lender or bank is involved, which always has a lien on the assets of the project.
Yes.
And, and what does that mean? Usually there's always an intercreditor agreement between the senior loan and the mezzanine loan, which is typically EB5, and which always dictates that if things go wrong, EB5 loan has to stand still, which means they cannot take any default actions. So, it's basically, you need to know how the project is structured, how deeply subordinated it is, and what are the remedies available if the developer is unable to pay. Now, we usually hear a lot about, there's collateral. And what's the collateral? The developer is pledging their ownership interest if something goes wrong, the EB5 can take over the developer's interest in the project. What does that mean? First of all, it's not automatic. So if a developer defaults on payments, it's not automatic that all the EB5 fund now owns the developer's interest. You have to go to court to get that. And what does that mean? It means it can cost. I have talked to securities attorneys who are in the middle of some of these lawsuits. It could take millions of dollars to pursue the developer. And then you have to evaluate, what am I pursuing? And if the developer has already defaulted, and that means the project's in trouble, what am I going to take over? Do I really want to take over as the owner of this project? And really, can 100 EB5 projects take over and deal with that situation? So it's a logistical nightmare. First of all, bringing hundreds of, however EB5 investors to come together and say, okay, we're going to put more money in to go to court to pursue this loan. So, there's a lot of buzzwords. There's collateral, but the reality is very different. So you really have to evaluate the reality of when things go wrong, what are the options and what is the likely outcome. And the one thing that should scare people is that you're investing in a company The only money that's in the EB5 fund is the money being raised from EB5 investors, and that gets invested into the project as is required. So there's no money in the EB5 fund that you're investing in. So if things go wrong, there's really no money available to go after the investor. And one of the things I worry about is that most developers know this, that they know that their lender, the EB5 lender, is in a much weaker position than, let's say, any other senior lender or any other lender that may have deep pockets to pursue this loan. So, I would say, just don't look at the check boxes of someone telling you, oh, this is a loan, there's a maturity, if there's collateral. It requires much more diligence. You really have to look deep as to when things go wrong, what are my options? And I think, so I like to change that perception of our EB5 loans simply just safe because they're loans. I believe they're not. So I'll leave it at that.
No, absolutely. I mean, we've seen cases where things didn't go as planned. Lawsuits are in place. The client is on the other side of the world. There's a language barrier. They obviously don't understand U.S. laws. So it can be a real pain, to say the least. Yeah, absolutely. I do want to jump to our polling question, because we do want to get the audience involved. We do want to hear their input as well. So for our audience out there, this is our polling question to you, because we want to hear your thoughts. The question today is, what is the biggest obstacle you face when you try to convince a client to take EB5 and to go with that route? Is it A, it's the long processing time? Is it B, the lack of EB5 investment? Is it the uncertain the repayment schedule, or is it all of that, or none of this? If you could please, enter your answers. I'll give everyone a few seconds, and we'll see the results of that. Yeah. I think we can see the results now, if that's available. Let me see. I think, has everyone submitted? Okay, so I see the results. We got 50% is at C. Half feels that their challenge is the uncertain repayment schedule. That's the biggest obstacle. The other half is saying it's none of the above. It's other obstacles, apparently. So that's that interesting. If the audience, if they can tell us what's the other obstacles, we'd be keen to hear as well. But so far, Rupy, it seems like it's the uncertain repayment schedule that's giving agents a tough time when they're trying to convince clients. Do you have any thoughts on that, Rupy, Prashant?
Yeah, a variety of issues are there, because particularly I'm talking about the Indian market perspective, that in the past in India, a lot of projects came from the USA, and they were not regulated, and people have burned their fingers with their investments, with the returns, with the remittance of the money, with the money going in a wrong way. I mean, say invested or taken the money by their friends and relatives. So there's a lot of other issues are also being faced by the investors and agents here in India. I keep hearing those cases on a regular basis. Also, another things what I've seen is that lately, like I have a few clients now, where they made an investment before November 2019, but they have not heard anything, any update for their projects. They have not heard anything from their lawyers or anything. And now they are coming to us. And most of the clients, to be honest with you, King and Rupy, they are not even aware that in which regional centers they have invested the money.
Wow.
I had one client, and these are educated clients. This guy is a leading professional here in Gujarat. And when he came to meet me, and he says, once to Prashant, I know I came to meet you, but I had somebody else was known to me, and I made an investment through him. I says, that's fine. And what he brought to me was just a copy of the 526. Nothing. He didn't have any other document. I said, can you tell me the name of the regional centers? No. Can you tell me the name of the projects? He says, no. He says, I was in USS and I went to this particular state and I met this guy once. That's about it. Nothing else. So, and those kind of an experience with the investors doesn't give a good reputations for the other people to make confidence. If this guy, this professional had a good experience, he would recommend to the other 5 or 10 investors, but not. I had another client, similar situations. He has an interview in 4 weeks' time, and he had no documents with the Bombay consulate. So in 4 weeks, like he came to my office several times and meet us, and I tried to basically help him construct the whole file. And once the file is gone through, prepare him for an interview. So these kind of things which we can help them, then they will have a better experience with the clients, and then they will recommend it to their clients or to their friends or relatives that this is the way to do it. So basically the challenging is that people are not having a good experience with the professionals, whether it could be an EB5 regional centers, it's an immigration lawyers, or it could be combinations of all together. That they need a lot of hand holding here in India, which the professionals and the regional center sitting in America are not in a position to provide that. And many a times the agents has referred the clients to them, but he himself is not also knowledgeable and equipped to provide all this support to them.
Okay.
Right.
So
sorry.
No, go ahead. So continuing on, on that answer about the challenges with not knowing about repayment, what I can say to you about this project is it is a equity investment, a truly an equity investment. Equity investments don't have a particular timeline of repayment. There's no maturity date. So, but I have structured this in a way, really from what would an investor want? What would I want if I was investing in this project? And the way I've structured it is that there's no participation in profits from any management until the EB5 investors' initial capital has been repaid. So once people start becoming eligible, they've met their they met their risk and requirement of keeping the money at risk for 2 years, the cash flow available first has to go to repay investors. We cannot distribute any profits to management until that $120 million is paid back. Only after the $120 million is paid back, then we can look at the cash flow we have and then start distributing it. And investors participate at 50% in that cash flow anyway. So even after they get repaid their initial investment, we don't say, okay, you're done as a limited partner and there you go, there's your green card. We still keep you in the project as a limited partner. Oil wells typically will produce for about 20 years. So there could be royalty checks coming for a long time. But our plan is most likely going to be that we'll probably sell all the future production in about 6 years. So, we'll have an exit of where we can sell the assets and give, a substantial return to investors. So that's how it's structured.
Okay. All right. Thanks for that, Rupy. I think the audience is
Investor first. That's the key line.
Yes.
No, absolutely. Safety and stability. And we hear that from, the agents as well. They want that for their clients. The founders do as well. And Rupy, I think people are truly intrigued because I'm getting the same question over and over. I don't know if you can discuss too much, which is what's the commission to migration agencies? So
Sure.
yeah.
I would like to actually discuss that more individually, but what I can say is that it's very attractive.
All right. Yeah, I think yeah, I agree. I think this needs to be discussed individually, and you can reach out to Rupy on her email in the next slide. Rupy will also reach out to you individually, and provide those offering documents to you. So I thank everyone for the time here today and joining us. I thank Rupy for her time and Prashant as well. It's been very informative. I hope everyone here had some key takeaways from this session. Thanks again for joining us, and we'll be in touch soon. Take care and bye for now.
Thank you, everyone.
Thanks.
Thank you.
Thanks, Prashant. Thanks, King.
Thank you. Thank you,
you.
Rupy. Thank you, King.
Bye-bye.
Bye-bye.